It is 8:04 a.m. Pacific Daylight Time. It is the 24th day of August 2026, and this is episode 1378 of Bitcoin and Pakistan's crypto pitch. Come build here. As Virtual Assets Act moves forward, that's going to be first up in today's episode of Bitcoin and with me, your host, David Bennett, bringing you all the news about Bitcoin and macro from around the world. After the Pakistan story, we're going to get into what's next for the bond market. A bond market issue has become a very interesting situation all the way around, not least of which including the fact that the AI build out across the United States is basically fueled by private bonds. And like I said, it doesn't matter if it's private bond or a treasury bond. It doesn't really matter if it's part of the bond market, and all bonds are part of the bond market, then yields are affected. And we are doing everything that we can to keep those yields down. Then Illinois, remember that tax, the digital asset tax? Yeah, and as I figured, they are definitely getting sued. And we'll tell you more about that. Then Tether, they had a $120 million Bitcoin mining project. Looks like it has collapsed. And in the second part of the show, we will be talking about open source versus source available. And this is basically all about the Coldcard failure, or at least the argument between, hey, is it open source? Should we do, or just do source available? That argument has come up because of the way Coldcard and the CoinKite guys had been acting over the last 7 years, or more than that, probably. Strategy doesn't buy Bitcoin, but does sell a shit ton of MSTR. Then let's see here. We're going to get into a little bit of AI at the very end of the show. We're going to talk about the ChatGPT web or ChatGPT filled web at this point. And we'll tell you just how much it's filled. Okay, so Pakistan. Let's get up to the head of the show here on this Monday. Pakistan's crypto pitch says, come build here. As the Virtual Assets Act moves forward, Matthew DeSalvo coming at you from Bitcoin Magazine. Pakistan has announced a new regulatory framework for cryptocurrency after banning the entire asset class for close to a decade. Announcing the news in an ex post on Friday, Bilal bin Saqib, the special assistant to the Prime Minister on blockchain and cryptocurrency, invited foreign businesses to come to the country and set up shop. Pakistan's Virtual Assets Act introduces the country's first comprehensive legal framework for overseeing virtual assets and the businesses that operate in this space. Quote, for approximately an entire decade, Pakistan's answer to virtual assets was complete permission and complete ban. But history tells us that technology never waits for permission, bin Saqib said. He added, quote, to the companies watching Pakistan from outside, the front door is open for you. Come, get licensed. Come, get banked. Come, build here under rules that are clear, public, and enforceable. In a separate post, Saqib said that the country now has, quote, the rules, the regulator, and the licensing framework to bring virtual assets into the formal economy, protect consumers, and build the foundation for the next generation of financial infrastructure, end quote. Pakistan's Virtual Assets Act was approved by the Senate earlier this year and then signed into law by President Asif Ali Zardari. Friday's announcement indicates that licensing regulations are now in place. Pakistan has made a crypto-friendly pivot in recent years In 2025, plans to launch a national strategic Bitcoin reserve were announced at the Bitcoin 2025. Before that, the country announced that it was allocating 2,000 megawatts of surplus electricity to Bitcoin mining and AI data centers in an initiative aimed at generating revenue, creating jobs, and attracting foreign investment, according to Pakistani government. The country has played an important part as a mediator between the United States and Iran. A relationship started forming between the two after it became an affiliate of Trump-backed crypto project World Liberty Financial. Oh, that answers a lot. Okay, weeks after President Donald Trump's return to power last year, World Liberty Financial leaders went to Islamabad to meet with Pakistan's prime minister. Now it makes more sense as to why Pakistan is in the middle of this Iran-United States affair. So there's a lot more subtext going on here in the whole Middle East actions, because this entire situation with the Middle East, with the Strait of Hormuz, with Iran, with Israel and Gaza and Lebanon and I guess Syria and the thing is that yes, it is the Middle East one more time. However, it does feel different. I can't exactly put my finger on it, but something is off. This time I'm going to say it. This time it's not about oil. I mean, it's always about oil, but there's something else going on here. And I mean, I could sit here and pontificate till the world looks level about what I think the subtext is, but this kind of opens up a new window for me to look in. And that is that Pakistan is part of this whole World Liberty Financial thing. Because I had always been wondering, why is it Pakistan that is being the mediator between Iran and the United States? Why Pakistan? It's not that it didn't make any sense at all, as much as it was kind of surprising, for lack of a better term. But now it looks like Pakistan is going all in. And I think this is actually going to force India's hand. Because Pakistan and India are pretty staunch enemies. And India is staunchly against crypto, or at least they end up coming on the side. They keep flip-flopping, but they always seem to, their longest status on crypto is always banning it, right? Then they'll flip-flop and they'll unban it, but that won't last very long, not in comparison to how much they really hate this stuff. But now, for lack of a better term, their arch rivals, Pakistan, seem to be going all in on crypto legislation. So will that change the way India views this entire thing, considering Pakistan is doing what they're doing? I mean, I don't know, but I honestly think it will. I think their hand's going to be forced on this entire situation, and they're just not going to have any choices here very quickly. And that they're going to have to start doing some kind of legislation and regulatory frameworks to allow cryptocurrency to exist within that nation. Now, on to Besant and his $4 billion bond buyback to get yields lower. Except it didn't do that. It got a Bitcoin surge instead. CoinDesk, Omkar Godbol writing this one last week. U.S. Treasury Secretary Scott Bessent announced a measure to calm the Treasury market. Oh, thank God we're saved. Instead, what he's got since then is a rally in Bitcoin and, of course, gold. On August the 19th, Scott Bessent announced an increase to the size of the Treasury's bond buyback program, raising the maximum per operation amount for 10, 20, and 30-year bond repurchases to at least $4 billion. That's up from the previous $2 billion limit. The move coincided with longer duration yields hovering at their highest levels since 2007, which is a challenge for both fiscal management and risk assets abroad. The market reaction was immediate, and it showed up almost entirely in hard asset, not bonds. Bitcoin surged to nearly 80,000, with the broader crypto market triggering billions of dollars in short position liquidations, and gold rallied as well. Analysts said that the announcement made clear how uneasy officials actually are about rising long duration borrowing costs, and it fed hopes that a more aggressive liquidity easing operation could follow. Hard assets naturally benefited from that expectation. Bitcoin's move reflects an alignment of macro and policy catalysts. The Treasury's decision to double its buybacks of long-dated government debt is aimed at calming the bond market and providing liquidity over the long end of the curve, where borrowing costs have been rising on concerns over U.S. debt levels and inflation. Fabian Dorey, chief investment officer at Signum, said in an email, quote, "This is not money printing." Excuse me while I laugh my ass off. Quote, "This is not money printing. The mechanism sits with the Treasury rather than the central bank balance sheet. But the signal matters. Managing the cost of U.S. debt has become an active policy priority, and that reignites currency debasement narratives. It is telling that gold and silver rallied alongside Bitcoin, with capital rotating into scarce, non-sovereign stores of value," Dorey added. But the actual target of the move, which was bond yields, hasn't budged in any meaningful way. The 30-year yield is still hovering at around 5.25%. It's up from an August 19th low of 5.19% and just short of the 5.33% touched on August the 18th. It's the highest level since 2007. The 10-year and 2-year yields tell a similar story, according to the data source TradingView. That disconnect points to something fairly larger than the buyback itself. The forces pushing yields higher, chiefly a national debt that hit the $40 trillion market, along with expected deficit spending that implied more borrowing and more bond supply ahead, which means lower bond prices and therefore higher yields, appear to be largely outside Bessent's control. As one framing put it, those forces act like a fire hose on an ocean, making it hard for a $4 billion buyback program to meaningfully push yields lower. Quote, "The rapid reversal," the higher in yields, underlines concerns that buybacks may provide temporary liquidity support, but do very little to address the underlying fiscal and inflation risks driving the term premium higher. The outlook is not being helped by another increase in oil prices, with the Middle East crisis showing no signs of ending and renewed energy price pressure adding to inflation concerns, Saxo Bank's head of commodity strategy, Ole Hansen, said. The open question now is whether these still elevated yields eventually cap further gains in Bitcoin and gold. Normally, high yields on Treasury notes, the traditional safe haven, pose a real risk of capital flight out of zero-yielding assets like Bitcoin and gold. This time may be different for two reasons. First, the Treasury's own move signals real unease about rising yields, and if yields stay stubbornly high anyway, that keeps alive the expectations of more aggressive intervention down the line. And second, to the extent elevated yields are being driven by debt and inflation fears rather than a strong economy, that's arguably bullish for hard assets like gold and Bitcoin rather than bearish for them. As Robin Brooks, senior fellow at the Brookings Institution and former chief economist at the International Monetary Fund, put it, quote, "Markets are on the lookout for high-debt governments playing games with yields. Even the smallest move sees markets head for the exit. We are in the age of debasement." Debasement in this context refers to devaluing a national currency to inflate away the burden of its debt. It functions as an indirect tax on savers, one that tends to push them towards hard assets like gold and Bitcoin as a hedge. All right, so That's where we are with the bond market. Their shit ain't working. It's just not working. And they're going to have, I mean, they're already going to print money. They're going to have to print money just to do this buyback, because the Treasury effectively doubled the amount of debt that they want to buy back. They don't have the money. They got to print it. So that's one form of easing, but it's not going to end there. They're going to have to print money, because the math doesn't work in any other way, which means anybody that's got money in savings, your purchasing power is about to decrease yet one more time, which is why we buy Bitcoin. And I think in the short to medium term, actually, I think more on the shorter side of that, we may see the price of Bitcoin not move all that much. Okay. I was about to say not move all that much higher. What does that mean, David? I don't mean not all that much higher from where it is right now. I'm just saying that we might not see like $10,000 one day candles for a little bit. You know, I mean, we may see some squelching of that headroom that we've all come to know and love, because at this point, the amount of confusion in the markets is doing nothing but increasing, because nobody really knows what to do. So when I say things like buy Bitcoin, hold Bitcoin, that is true. And I'm not saying don't buy gold and don't buy silver, but I do think that many of us, if at all possible, should really be considering also, along with Bitcoin, hard assets like real estate. And I do not mean buying rental properties to rent them out. I mean, maybe it's time to start thinking, looking at your family going, do I really want to be in the city? Or do I want to take the money that I've got, quote unquote, in savings, in the stock market, whatever, and do I want to buy a little piece of property somewhere that's a little bit farther away from what could be absolute mayhem? And I don't know. I'm not calling for it. It's just I'm not sure that it is the best idea in the world, given where we're going. And this includes AI. It includes all this debt that's floating around. It includes the math that doesn't work. It includes everything. And my question really does become, should we start considering living a different way? You know, if you've listened to this show for any length of time at all, I'm asking basic fucking questions at this point about existence. What is wealth? What does love and family actually provide? Is it more important to have those things than just as much money in your 401k as you possibly can? Because remember, if you did not realize this, the idea of retirement accounts and all that shit is actually relatively modern and new to the human species. And people did just fine. You know, because sometimes I think about, I get to retire at 65. If you're looking forward to retirement, then what did you do with your life? And I'm not like that. I know it gets weird because we start talking. I start talking out of the side of my ass, and I will admit that I have no idea about everybody's, what their jobs are. I have no idea if they how much they hate their jobs, if they hate their jobs, how much they love their jobs, that kind of shit. What I am saying is that there seems to be a red flag when somebody's like, "Fuck, I can't wait for retirement." Well, then what the hell are you doing today that sucks so much? You get what I'm saying? I'm not saying that we shouldn't ever retire, but I hear people talk about like, oh my God, they want to raise the retirement age. Well, that means that you're depending on some kind of program or some kind of instrumentation that makes everything better. And now that it's being pushed farther away from you, and you get angry about that, shouldn't that actually say more about what happened today and yesterday then what would happen if 65 got pushed to 67 years old, or 67 got pushed to 70? Because I mean, and even I'm like going, yeah, that's kind of a shitty situation, because they were been doing that kind of stuff in Europe. But then I really started thinking about it, and I go, well, wait a minute. What's so wrong with what you're doing now that you can't wait to stop doing it? I don't know. It smells like a red flag. It smells like something that we should stop and go, wait a minute, hold on. What are we doing? What are we doing that we're looking forward to not doing it anymore? Did we really get suckered into, like, you've got to do this because you're 401k, you got to do this because you've got to, do this whole retirement gig? I get retirement if you've just destroyed your body and you just literally physically can't pick up something. But if like my dad said, if you can fog a mirror, there is hope. And I always took that to be, if you can fog a mirror, there's something you can do. There's something that you can do that you like doing. And maybe instead of stacking up enough money so that one day you don't have to do anything, which I never understood. I had an uncle that did that shit. Man, I mean, you want to talk about somebody who I saw him sit in a chair and stare at a wall for an hour one day. I'm like, this just does not look like something I wish to do with myself. So I'm just saying that it seems that with all this shit going around, that when we talk about hard assets, gold, silver, Bitcoin, and even in my case, real estate, I'm not sure that that's the hardest asset that there is. I think family and love and a little piece of land that you can not just call your own, but possibly, potentially, through things like regenerative agriculture and permaculture, make it into even a profitable endeavor, if not just something that produces some kind of food. Some kind of like connection with why the hell are we here in the first place? Because really, if the answer is, if I ask the question, why the hell are we here in the first place? And the answer to that question is because you're waiting to die, and we want to make the end of your life as comfortable as possible, then I'm not sure that we're actually getting the point of existence. Now, these are just questions, but I think that we should start really asking ourselves, why are we here? Just something to think about. Okay, on to this one. Crypto advocates join in suing Illinois over digital asset tax. Sounds like shit's going down in the land of Lincoln. CoinDesk, Jesse Hamilton writing. The crypto industry is piling more legal challenges on Illinois over its new law that imposes a 0.2% tax on businesses transacting or storing cryptocurrency for customers within its borders, with two more advocacy groups filing another lawsuit. The Crypto Council for Innovation and the Blockchain Association sued the state on Friday, claiming the crypto tax violates the United States Constitution, the Illinois Constitution, and the Internet Tax Freedom Act. Its legal volley joins an earlier lawsuit filed last month by the Digital Chamber. Quote, this tax singles out digital assets for uniquely punitive treatment based on the underlying technology rather than the substance of the transaction itself, said Ji Kim, who leads CCI, in a statement. Quote, a tax on digital asset activity with no equivalent tax for traditional assets unlawfully picks winners and losers through the tax code. Filed in Sangamon County, the latest lawsuit seeks to head off the state's tax, which applies to firms that are based in Illinois or provide services to residents with total receipts of more than $100,000. The tax has been estimated to potentially raise $60 million for the state budget, and critics have noted that it will be imposed even if the taxpayer has lost money on crypto because it's based on transactions. Quote, Illinois cannot impose a novel tax regime that discriminates against digital commerce, creates uncertainty for consumers and businesses, and threatens to fragment a rapidly growing national market, said Summer Mersinger, CEO of the Blockchain Association, in a statement. Okay, that makes sense. I mean, it does. It does make sense. If I buy a refrigerator with cash at an appliance store that also happens to accept Bitcoin if I were to so choose, then I just pay whatever tax is there for the refrigerator. And I don't know what that is in Illinois, but let's say it's like a 1% tax, or sales tax is what you're paying. But if I buy that same refrigerator at the same appliance store, but I use Bitcoin, I tack on a 0.2% tax, and I'm not buying anything different. I'm not buying a different kind of refrigerator. I'm not buying a refrigerator from out of state. I'm buying it at an appliance store in Illinois, but if I buy it in Bitcoin, I have an extra tax imposed on me. So it's that's what they mean by this. Like it's the transaction. It's not the nature of the sale. Like if I were to buy, marijuana, I could see that having a different tax regime simply because it's, marijuana or whatever. So therefore a tax would be different. But if I were to buy marijuana with cash versus Bitcoin or any kind of cryptocurrency, and I have a 0.2% tax tacked on simply because I'm using cryptocurrency, then that becomes an issue. And I think that's what they're saying here is that, look, if you buy one thing with cash or check, credit card or whatever, then it costs this much. Why is that exact same transaction being punitively hit just by using a different form of money? And honestly, I don't think Illinois is going to win this. I think they're going to end up having to back down is what I think is going to happen. And it's going to be an awesome precedent because at that point it's going to clear the decks so that state legislatures can say, yeah, we're not going to do this. We're just not going to do this at all. It's just, the way you have to think about things nowadays, ladies and gentlemen. And if you want to think clearer, you might try the possibility of microdosing mushrooms. The Circle P is open for business. Circle P is where I bring plebs with goods and services to you, other plebs who might want to buy those goods and services. But if you're going to be in the Circle P, you need to sell your goods and services in Bitcoin. Otherwise, you're not in the Circle P. And today I am showcasing somebody who does not know that I'm showcasing them. I know this is what I personally love about the Circle P is that I just don't ask people's permission to do shit. If I see a product that I think you guys might want to consider, then I'm going to bring it to you. And it's a way to give smaller plebs out there like a leg up, give them a little bit of a spotlight for their product and or service. And it's free of charge. The people that I'm about to talk about right now have zero idea that they get an ad on the Bitcoin and Show. It's the worst advertising model ever because I get literally no money for this shit. But there are certain things that I look at and I go, I want that, or I want to try that, or I think that this is something that I want. And if I want it, there's no reason in the world that I shouldn't tell you guys about it. Now, caveat, I have not yet tried this product, but I want to bring it to you because A, they're plebs. All right. They're just a small company trying to, be able to do what it is that they want to do for life. And that's what I like seeing. And two, they have a product that I am going to buy. In fact, I've been talking to their team, trying to make sure that they can ship it to me here in Eastern Washington State because it's a Canadian company. I want to make sure that they can ship this stuff to me. But I just want to showcase something called micro days. The website is microdays.c as in Charlie, C as in Charlie. Microdays.cc. Bitcoiners understand the importance of questioning defaults. Whether it's your money, your health, or your relationship with technology, intentional choices matter. Microdays makes carefully crafted mushroom microdose products for people exploring focus, creativity, and mindful wellness. Their products are organically grown, thoughtfully dosed, and available as convenient capsules or handcrafted chocolates. It's another example of people looking beyond the standard playbook and exploring what nature, science, and personal experimentation can offer. Discover more at microdays.cc. That's microdays, DAYS.cc. Microdays. Explore your potential one small step at a time. So they make microdoses of psilocybin mushroom. It's got some other stuff in there too, like chaga and lion's mane and a couple of other things, but they have several products, but they also have products that like the basic capsules. They have chocolates and chocolate bars and like bonbons and shit like that. But they also have just jars of just your standard pill form capsule, right? And there's like five different dosages. And like, so you can get like the lowest dose, which I think is like 30 milligrams, or you can get like a really high dose, which goes up to like 800 milligrams, which is getting close to the 1 gram level of psilocybin mushrooms, which is getting into the heroic dose. But if you're microdosing, what the hell does that mean? Technically, it should be sub-perceptible, or getting into what's called sub-perception range, where it's working in the background, but you're not tripping. You're not tripping. It's like CBDCs, like low-dose CBDCs. It just makes you, maybe makes you feel calm, all that kind of stuff. But it's not like smoking a joint with like 33% THC where you're stoned out of your freaking gourd, right? Same thing can happen with microdosing psilocybin mushrooms. I've been reading about this for a long time now. In fact, some of your favorite products from Apple came at the hands of people that were basically microdosing psilocybin mushrooms. They would go to work with a little bit of psilocybin in their bloodstream. Not so much that they're tripping and hallucinating and, I don't know, like seeing the face of God and shit. No, they didn't. I mean, they were completely functional, able to answer the phone and talk to anybody anywhere, except that subliminally their minds were being affected by very low doses of psilocybin. That's a microdose, and that's what Microdays offers. Like I said, they're a Canadian company. I've been told by their team that they have no problem shipping to the United States. I'm gathering more information as to, well, do you have to ship to a state where mushrooms are legal, like Oregon? Or can you ship to Washington State? Or can you ship to Texas? Can you ship to Florida? I'm been talking to them like as of last night, because it was yesterday that I first discovered this company. But you honestly, if you want to learn more about this whole microdosing thing, what I really like about Microdays is that they take a lot of care in their marketing. And I don't mean trying to sell you shit. Marketing is like the information and materials that they have that support their product. Yes, they use it for advertising, but this website is one of the most informative websites that I've ever seen. They have it's a 97-page full color booklet that kind of explains what all this is, where, who figured out microdosing, talks a little bit about, people like Timothy Leary, a Time magazine article from 1975. And I've talked about that same article before. I can't remember I think his last name was Wesson. and he was a president. He was one of the big wigs at J.P. Morgan back in the day, back in the 70s. I mean, J.P. Morgan, the bank, the same crew that goes to Davos. In the 70s, they had a vice president that decided he wanted to go down to Central America and trip balls on mushrooms. And he wrote a huge article about it in Time. And that article was one of the articles that Timothy Leary read. And Timothy Leary is the guy that sort of came up with LSD. He was the guy that said, tune in and drop out, or something to that effect. I can't remember exactly what he used to say in the 70s, but that article started a whole bunch of stuff. The marketing materials, this particular pamphlet that they have online at microdays.cc, is really informative about this. So if you've ever considered wanting to get more focus, maybe treat ADD, ADHD, possibly post-traumatic stress disorder, PTSD. There's a lot of information that suggests that psilocybin mushrooms, especially in lower dose ends, can really dramatically affect the way your brain works. You can possibly even form new neural connections, calm anxiety. Maybe it doesn't cure depression, but there's a lot of literature that suggests that it helps. And I am inches away. As soon as they tell me that they have no problem sending it, shipping it to Washington State, I'm pulling triggers, and I'm paying for it in Bitcoin. Because yes, on the microdays.cc website, there is an option to click, and they use BTC Pay Server. So I know they're the plebs that I want to work with. So go to microdays.cc. That's microdays.cc. If you've ever considered microdosing psilocybin, this, I think, might be the company for you. Now, more on that later. If I actually can try the product, if they can get it to me, I'm buying it. And if I'm buying it, I'm taking it, and I promise you I will report back. Okay, Tether. Excuse me. Tether's $120 million Uruguay Bitcoin mining project collapsed over a power contract dispute, according to Reuters. Zach Abrams writing for The Block. Tether abandoned an estimated $120 million Bitcoin mining project in Uruguay, seen as a first step into a wider South American market, following a contractual dispute between the stablecoin issuer and state-owned power utility UTE. Tether and UTE disagreed on how much power the two mining sites were entitled to under the contract. Tether thought an agreed-upon power supply figure was a minimum that could be increased in the future, while UTE thought the figure represented a hard cap. Wow. See, we need better communications. All of us need to learn how to communicate much, much better. The two sites, located in Uruguay's Florida department, initially ran well and generated income, according to two former contractors. As the site's electricity demand increased, however, the operation sometimes lacked sufficient powers for days at a time. Though both sides sought to resolve the dispute by signing a revised contract, Tether representatives reportedly did not show up to the signing, according to meeting notes obtained by Reuters. A former contractor and another source told Reuters that the dispute intensified after the election of the left-leaning government led by Yamandu Orsi, who took office in March of 2025 and later appointed new directors of UTE. Per the sources, the new leadership took a harder line on the contract negotiations. Microfin, Tether's Uruguayan legal entity, stopped paying its electricity bill 2 months after the change in government. It told UTE in June that it intended to terminate the contracts. With the revised agreement unsigned and the bills unpaid, UTE cut power to the sites on July the 25th, 2025. Tether notified Uruguay's labor authorities on November 25th that it would end operations and lay off most of its staff, Reuters reported. A source with knowledge of the deal estimated that Tether spent around $120 million on the project. The company never publicly disclosed the size of the investment. Tether did not respond to requests for comment from either Reuters or the block. Tether's announcement of its Uruguay mining operations in May of 2023 described the country as the, quote, perfect platform because of the renewable electricity generation and established grid. Well, Reuters added that the country's political stability was also attractive for foreign investment. A foreign contractor told Reuters that Tether viewed Uruguay as a, quote, first step in a testing ground before expanding into Brazil, Paraguay, and Argentina. At the time, Tether said it would soon expand its mining operations to other countries. In June 2025, CEO Paulo Ardoino told the block's Big Brain podcast that the company would become the biggest Bitcoin miner out there by the end of the year. At the time, Tether said it had invested more than $2 billion in energy and mining infrastructure across 15 sites in Uruguay, Paraguay, and El Salvador. UTE disconnected the two Uruguay sites 1 month later. Tether has continued investing elsewhere in the region, acquiring a 70% stake in renewable energy producer Adecor Agro, and later signing an agreement to use the company's surplus electricity for Bitcoin mining. The company has also released an open source operating system for mining operations, taken an 8.2% stake in mining finance firm Ant Alpha, and begun developing modular mining systems with Canaan and Acme Swiss Tech. Tether's USDT is around $183 billion in circulation. The firm, based in El Salvador, employs a few hundred people. It also has an investment portfolio it values at about, $20 billion, according to Reuters. Most of its more than 100 investments have not been publicly disclosed. So, Tether's mining deal with Uruguay completely falls apart. And it makes me, my gut feeling is that as well as Tether has done, and they have done very well monetarily over the past few years, I still think that Paulo Ardoino is operating under the auspices that he really knows how to operate in the world like some kind of world-class business development guy. And I'm not saying that he's not good. He clearly is. He's probably a billionaire. But I just wonder if maybe at this point Tether isn't in a position where what they should be doing is literally hiring a new CEO and have Paulo just get to the board of directors, so that somebody else who is just even more voracious about shit like this than any of the top guys at Tether is now can actually be the guy that is like the pit bull, the guy that goes out and rips shit apart. And if I think that that's what happened, is that there's only so much that the team at Tether can do with themselves before they actually have to expand their C-suite. And I'm not just talking about adding more people. I'm just talking about finding people that really know how to trash the place. Not Tether, but everywhere else. Like the pit bulls. Go hire the pit bulls. You got to pay them a shit ton of money, but they're going to make you a shit ton of money because they have a lot of experience operating in business development and whatnot like that. And I just like, for the size of mining operation and the country that we're talking about, Uruguay, there's no reason that deal should have fallen apart, especially when it looks like it was a communications mismatch. This is why communicating is so awfully important between humans. And I mean the kind of communication that is so detailed and almost pedantic in making sure that every detail is known by all parties and all stakeholders. Otherwise, you end up with bullshit like this. There was no reason for this crap to happen. And I think it's really a signal that Tether is trying to contain not having to expand its area. How to say this? I think Tether is trying to keep everything in the family. And I think Tether is at this point, with the amount of investments that it has and the amount of places that it has them, the size of its balance sheet, and the fact that it has $183 billion in circulation of its stable coin, I think they're going to have to look outside of their family, is what I'm getting at. So we'll see. Meanwhile, let's run the numbers. CNBC futures and commodities. Brent North Sea oil down 2.1% to $92.41 a barrel. West Texas Intermediate down 2.5% to $84.83. Natural gas is a slight hedge this morning, 0.29% to the upside. Gasoline down almost 3 points to $3.25 a gallon. Murban crude down almost a half to $103 a barrel. Metals are slightly mixed, mostly in the green. Palladium up 2.25%, gold up 0.8% to $47.19. Good job, Peter Schiff. Platinum up a half. Silver is down just over a point to $68.81 an ounce, and copper is up 2/3 of a point. Ag is mixed this morning. Biggest winner is coffee, 5.1% to the upside. Biggest loser is soybean, 1.5% to the downside. Live cattle down 1.5%. Lean hogs up 0.4%, and feeder cattle down 1.5%. The S&P is down 0.18%. NASDAQ is down 0.7%. Ooh, Dow is up 1/4 point. And the S&P Mini is the biggest loser, 0.8% to the downside. Oh, wow. $79,200 per Bitcoin is a $1.59 trillion market cap, and we can get 17.0 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,074,376.13 of. Average fees per block are normal. And there are, in fact, about 45 blocks carrying 80,000 unconfirmed transactions waiting to clear at high priority rates of 4 sats per VByte. Low priorities will get you in at 1. Hash rate has fallen. 875 exahashes per second. That is more than enough security for the Bitcoin network. I am unconcerned. If you would like to support me and this show and the stuff that I do by bringing all the news that you can use, then go to bitcoinandshow.com. That's bitcoinandshow.com. There you can support the show in fiat currency. I have 2 different tiers that are paid tiers. One is $5 a month. One is $50 per year, or you can get the free one. Sign up, give me your email. I promise I won't give it to anybody. I'll give you like a breakdown of a couple of shows that happened during the week, give you a link to the actual show itself, some pretty artwork. But it's really more a way that you can show your support if you want to use fiat currency. If you want to use Bitcoin instead, then I highly recommend using some form of podcasting 2.0. There are many different podcasting apps that are fully podcasting 2.0 compliant. You get chapters, you get transcripts, you get all kinds of stuff with podcasting 2.0, including a Lightning wallet. And there's like 10 different podcast apps that are podcasting 2.0 compliant. And they all basically come with Lightning wallets. And that means that you can stream me Satoshis like 10 sats per minute as you listen. Or you can send me what's called a boostagram, which would be a short note. You don't have to leave a note, but usually you can. And a fresh stack of sats. That's right. Just like Jason High. He boosted 10,101 sats. That is a nice palindrome boost. He says, here's a bigger boost than I usually give. I'll be in Taiwan for several weeks and won't have much time to listen to podcasts. This is the only podcast that I regularly donate to. I appreciate the show. Well, Jason High, I appreciate you as well. Thank you so much. I appreciate your kind words. Rev Hoddle with 420 says, what ways do you apply permaculture to podcasting? To all the permies out there, what ways do you apply permaculture to Bitcoin? How do I apply permaculture to podcasting? Man, that's a really good question, Rev. That's a really good question. I'm going to have to think about that because I really try to think about permaculture in all the things that I do. And, like, I guess I could say that here's one of the ways that I can do this is by reusing content. And what I mean by that is one of the things that's nice about my podcast host, which is podhome.fm. They're the people that actually host the files for the podcast, the audio files. They have artificial intelligence embedded that will give you a transcript. If you're paying them to host, the AI transcript generation comes along for the ride. That gives me the entire transcript of everything that I say. And then I can go through that and I can start picking out stuff. I can use it to drive all kinds of different things. Like a lot of times I will use AI to start drafting things that I want to write. And then I rewrite them. But the drafting process with AI is really important. If you just say, hey, AI, write me an article about, I don't know, Abraham Lincoln, you're going to get absolute fucking slop. But if you use AI as an editor and say, hey, here's a portion of my transcript. This is where I said something really funny about X, Y, and Z. I want to work with that. And here's the way that I want to work with it. Draft me, I don't know, like a light article based on this paragraph. Then I look at the article and say, no, this is absolute shit. That's not where I was going. I want you to really detail this part. And then it does so. And then I go, okay, we're closer. Now I take that and I start rewriting it. I give it back and I say, hey, edit for grammar and punctuation and spelling. It's like a huge spell check, right? But the point is that I'm like the output of one system, me sitting here talking, becomes the input of another system, writing an article or playing with possibly writing like marketing materials, right? I can leverage what I've already done, and instead of leaving it siloed and leaving it all alone and reforming something else completely, what do we call it? Ex nihilo, or from nothing, and starting all over again, I leverage what I've already done. And that's one way that the output of one system can become the input of a completely different system. So to answer your question, Rev, that is at least one way that I apply permaculture principles to podcasting. Nick Dose with 262 sats says, cheers, right back at you, pal. KT with 123 says this: it was me that boosted the 24,000 sats last week. Fountain manages to fuck up my boosts at least half of the time. I cannot understand why people like this app so much. The UX is terrible. I sent a Spaceballs boost that managed to go through twice, yet somehow not one message. Dude, KT, I am so sorry to hear that. He says, he also goes on to say, let's see, not one message posted. It mostly said, thanks for doing what you do. I'm always listening, but only occasionally pop over to Fountain to send sats, and now you know why. Okay, KT, first of all, a huge thank you for that massive boost. Secondly, the episode of Spaceballs, I think this is what you're talking about. If you need one of those boosts back, you let me know, and I will send it back to the address that you send me. Okay, because I don't want to keep something that doesn't rightfully belong to me. All right, so you just let me know, or actually give me the address to send one of those two boosts back to, and I will do so, because it just doesn't feel right that I got extra money from you because of a technical glitch out of Fountain. Third, I understand that Fountain has its issues. I've been having a little bit of issues as of late myself, but there are other podcasting 2.0 apps. Let's see. I think it's new podcast apps. Let's see. New podcast apps. Podcasting two. Let's see. Podcasting just podcast apps. Let's see. Podcasting 2.0 or .org. I'm not sure if that's it. Go to Podcast Index. I think it's podcastindex.org. Let me make sure about this. But yeah, podcastindex.org. I definitely know that this is Adam Curry's outfit. There you can find, there's a button at the top that says apps, and you can filter by podcasting app and things that allow you to boost and do all that kind of stuff. There's like not Blueberry, there's all kinds of stuff. There's Fountain, I think, Podverse is out there. There's a whole bunch of them, but you can filter through just podcast app and not have to look through this huge, amount of podcasting 2.0 available apps, because some of them are like podcasting hosting companies and shit like that. You don't want that, but you can filter these apps and go try another one. If you don't like Fountain, go get something else. There's a few of them. I don't know their names off the top of my head because I pretty much use Fountain, but I appreciate you telling me what the problem was, because it's not cool that KT that he ended up boosting me twice and only meant to boost me once. So again, KT, let me know, man, and I will give you your boost back. Nostragang with the Palindrome 101 says, thank you and have a nice weekend. Well, the weekend is over, but I definitely appreciate the sentiment, and that's the weather report. Welcome to part 2 of the news that you can use. Open source versus source available. What the Coldcard failure teaches about Bitcoin software incentives. Juan Galt, Bitcoin Magazine. Closed versus open source code has divided the Bitcoin and broader crypto industry for well over a decade. Bitcoin advocates have long argued that the financial infrastructure of the world should be built in public. Transparency and auditability, they say, are non-negotiable when real money is at stake, yet the app and legacy layers of finance often disagree. The recent Coldcard hack, a popular self-custody hardware wallet where users lost over $100 million worth of Bitcoin, cast doubt over what open source actually means. It revealed that perhaps most people, even many hardcore Bitcoiners, are poorly educated on the open source software development philosophy and when it fails. The language around open source can be fairly complicated. Free and open source software, FOSS, and free/Libre and open source software, FLOSS, refer to software that meets formal definitions of user freedom. The Free Software Foundation defines free software through 4 essential freedoms. Freedom 0, the freedom to run the program as you wish for any purpose. Freedom 1, the freedom to study how the program works and change it so it does your computing as you wish. Access to the source code is a precondition for this. Freedom 2, the freedom to redistribute copies so you can help others. And freedom 3, the freedom to distribute copies of your modified versions to others. Access to the source code is a precondition for this. The FSF, the Free Software Foundation, emphasizes that free refers to liberty, not price, in a common quote heard from FOSS advocates. Quote, free is in free speech, not as in free beer, end quote. The Open Source Initiative's open source definition adds 10 practical criteria. These include free distribution without royalties, availability of source code in the preferred form for modification, the right to create and distribute derived works and no discrimination against persons, groups, or fields of endeavor, including commercial use. A license must meet all 10 criteria to qualify as open source under the OSI standard. Quote, source available or, quote, source viewable is different. Code may be publicly readable while the license restricts the rights to sell it. Coldcard's firmware, for example, is released under MIT terms plus the Commons Clause. The clause specifically removes the right to sell the software, defined as providing it to third parties for free or other consideration in a product or service whose value derives entirely or substantially from the software itself. In other words, Coldcard's firmware could not be used commercially. The Commons Clause own frequently asked questions states the difference explicitly. Quote, is this open source? No. It notes that applying the clause means the software meets many elements of open source definition, but not all of them, and therefore should not be called open source. These definitions are important. Publishing source code creates the possibility of inspection. Granting the full set of rights defined by the free software definition or the open source definition is what makes software FOSS, F-O-S-S, or FLOSS, F-L-O-S-S. But having the badge of approval, being able to wave a FOSS or FLOSS flag, is not the point. Commercial liberty in FOSS unlocks third-party incentives to test and review code that might otherwise not be there, argue critics. The four freedoms from the philosophical core The four freedoms form the philosophical core of open source. In practice, they rest on an economic assumption that enough motivated people will actually examine the code. When that assumption fails, the system produces a classic tragedy of the commons, a situation where a shared resource is overused or neglected because individual users act in their own short-term self-interest rather than in the long-term interest of the group. Each person has an incentive to take more or contribute less than is sustainable, and the resource degrades as a result. This happens when there is a misalignment between the short-term self-interest of the individual and the long-term interest of the group. Sometimes alignment exists and sometimes it doesn't. One Bitcoin developer put the problem rather bluntly, quote, using mocks and stubs of open source code in tests is irresponsible and short-sighted. Open source code is considered safe because anyone can verify it. If you aren't willing to do the bare minimum of testing the features you actually depend on, then you are behaving like a leech, end quote. As a result, open source does not create safety all by itself. It creates the possibility of verification. Whether that verification occurs depends on incentives, skill, and intention. Historical FOSS is believed to harden over time as vulnerabilities are discovered, disclosed, and patched, creating solid foundations for others to build on top of. The Linux kernel is a great example of such hardened FOSS. It powers the vast majority of world servers, cloud infrastructure, Android devices, and embedded systems, making it one of the most widely deployed pieces of software in human history. Bitcoin Core, the reference implementation of Bitcoin, is another prescient large-scale example of pure open source functioning in the wild. The software, which runs behind most Bitcoin-related infrastructure, is released under the MIT license. Its development process is broadly public by design. Anyone can open a pull request. Code review is the primary filter and the recommended entry point for new contributors. Reviewers use a formal vocabulary, concept ACK, acknowledgement and agreement with the goal. Approach ACK, agreement with the goal and method. ACK with a special commit hash, tested and approved for merge, or NACK, N-A-C-K, disagreement, which should be accompanied by technical reasoning. Maintainers weigh consensus among contributors and the technical merits of a change before merging. Consensus critical changes face a still higher bar and usually require a Bitcoin improvement proposal and extensive multi-year discussions on the Bitcoin dev mailing list in IRC. There is no privileged caste of Bitcoin core developers. Trust is earned through demonstrated competence over time. Maintainers exist for practical reasons: auditing and merging code, managing releases, and basic moderation. But the work produced is pure open source code that anyone can inspect, build, fork, or run. Developers who get code commits merged into Bitcoin Core are broadly called Bitcoin Core contributors. Callie, a longtime open source Bitcoin developer, summarized the reality fairly recently. Quote, "People who think that Core is some sort of intransparent institution operating in the shadows are either too lazy or too dumb to go have a look for themselves. Literally everything they do is public, anyone can chime in, and the result of their work is pure open source code." Funding for this work comes largely through nonprofit and grant structures such as Brink, OpenSat, Spiral, and others, rather than a traditional company product roadmap. Technical discussion and debate take place publicly on the Bitcoin Dev mailing list and in the Bitcoin Core Dev IRC channel on Libera Chat, where proposals are scrutinized before and during the pull request process. GitHub issues and pull requests often carry comment history stretching back a decade or more. The result is a development culture optimized for correctness and auditability rather than speed or commercial feature velocity. Most users of open source or source available software never read the code themselves. They rely on the assumption that others are examining it. In the Coldcard case, a critical entropy flaw remained in publicly available firmware for 5 years before it was exploited and thus discovered. The bug entered the codebase during a major 2021 rewrite that also removed remaining GPL-derived code from Trezor, the first hardware wallet and now the second largest in the self-custody industry. The library at the center of the entropy failure, which replaced Trezor Crypto, is called libngu and had minimal external scrutiny with only 7 stars and fewer than 40 forks in over 5 years of being used in production. Compare that to the 512 stars worn by the Trezor Crypto library alongside 212 forks, or the 793 forks and 1.8 thousand stars of the more modern Trezor firmware. Source availability alone did not produce the review that mattered, because other for-profit, well-funded companies were restricted from using it, or so critics would argue. The stakes are much higher in Bitcoin than in most software domains because a critical flaw can be converted directly into liquid funds on an open market. While the first half of the Coldcard funds stolen are still in a handful of addresses, and the hacker may one day be caught, copycat hackers that followed were more careful, and some have stolen more Bitcoin and laundered it successfully per Galaxy Research. Bitcoin's censorship resistance and immutable transactability create both a powerful incentive for attackers and a Darwinian filter. Only projects that continuously attract competent review and users and companies that take serious precautions tend to survive long term. Licensing choices shape those incentives, according to FOSS advocates who criticize CoinKite's licensing decisions for years. Pure open source license maximizes the pool of potential reviewers and forks. Restricted source available licenses can reduce commercial free writing, but also shrink the circle of people with both the legal right and the economic incentive to invest deep attention. Alas, the burden of code review falls back on the company under a restrictive license, placing it in some sense closer to closed source than to open. Artificial intelligence is now altering the balance between FOSS and closed source. After the Coldcard incident, a volunteer effort known as the Bitcoin Red Team used frontier AI models to scan hundreds of open source Bitcoin repositories. In one intensive period, The team filed thousands of findings, including dozens classified as critical or high severity across hundreds of projects. Responsible disclosures were made to maintainers before broader publication. The exercise demonstrated that systematic AI-assisted review can surface issues at a scale and speed previously impractical for purely human teams. On this front, it is worth noting that the red team found Chinese open-weight models far more reliable than closed-source American models, which, even with cyber permissions and top-line access, refuse to answer red team queries, a trend that American developers lament. At the same time, the flood of AI-generated code has created a new denial of service pressure on FOSS maintainers. Reviewing AI output often takes longer than generating it. Some open-source projects outside Bitcoin have restricted issue trackers or imposed strict anti-AI contribution rules simply to stay functional. On the closed-source side, the traditional advantage of security through obscurity is eroding. Modern AI models can read, deobfuscate, probe endpoints, and reason about code at very high speeds. The practical difference between open and closed source is now mostly relegated to back-end code that never gets shared online. Closed source code, as a result, stands only on the quality of professional audits, the speed of patch deployment, and the incentive structure that keeps competent people with access looking at it. Bitcoin and the broader crypto industry are applying unusual pressures to free and open source software. The combination of real monetary value at risk, adversarial economics, and now AI's scarce analysis is forcing the software models to evolve. Returning to analog, pre-digital systems is hardly an option for infrastructure that holds up modern society. Only the most audited projects are likely to survive the pressures of AI-aided hackers and the weight of digital-first finance. That's the end of the article. This is an important article. And the reason is, and I'm going to read it this way, I want to read the very last sentence of the article again. Only the most audited projects are likely to survive the pressures of AI-aided hackers and the weight of digital-first finance. And I want to marry that with this section up above. Bitcoin's censorship resistance and immutable transactability create both a powerful incentive for attackers and a Darwinian filter. Only projects that continuously attract competent review and users and companies that take serious precautions tend to survive long term. Take those together and let me go back to the annals of my biology training. This is what I meant, what I've been meaning when I say we've crossed the Rubicon. We now exist in a completely different time. However, pre-crossing the Rubicon and where we find ourselves now essentially exist in the same general ecosystem. Evolutionary pressures. Evolutionary pressures is a critical concept to understand when it comes to evolution itself. All things being equal, nothing on the planet Earth would ever change because there's no evolutionary pressure to evolve, to become different, to acquire different skills or different physical attributes that could be considered acquiring a different skill. Like if there was let's say the Earth was populated by one species of bird and it didn't have to fly anywhere because there was nothing else to eat it. So it didn't have to fly. It was just had bird legs and a couple of wings. But then a flood happens, right? Now, all through this population, mutations are happening all the time. And let's say for whatever reason, there's a particular mutation that keeps cropping back up. And instead of bird feet, you get duck feet, webbed duck feet, right? But it's hard to walk with duck feet, right? Let's just say that it makes it less likely that a mutation that ends up with duck feet, that individual bird with that mutation, it makes it less likely that it would be able to pass its genes on to the next generation, which would reinforce that mutation. Okay? Let's say it dies before it gets to reproduce. So the mutation basically is still in the population, but it's not really getting reinforced. It's not really like getting feedback that is causing it to become more and more prevalent in the breeding population. But all of a sudden, a flood comes. And these birds can't swim. Their feet can't paddle anything. But there's a couple of individuals, let's say a handful of them, like 5, 6, maybe, 10. And there's like 3 females and 7 males. And they all have webbed feet. All of a sudden, they have a skill. It comes in the form of their webbed feet. So that skill is, fuck it, they can swim. They can stay afloat. They're much more maneuverable, much more mobile. They have access to distance, which means they have access to more resources, food. And they start being the only ones to survive. And like it's mass casualties. All of a sudden, your breeding pool for that entire class of animal drops significantly, except for these 10 individuals, and they are the ones that start breeding hand over fist. And the mutation becomes permanent. And you get a duck. Now we have ducks. See how that works? It's the same thing that's trying to be said in this particular article. For whatever reason, we, as human species, especially in the West, especially in modern times, we have a bad habit of not looking at patterns in nature and understanding that those patterns are everywhere, including free and open source software. Evolution occurs in digital software too, not just with birds and fucking ducks. Bitcoin is an evolving creature. It's not a technology. Bitcoin, I am as much of a technology in my human body as Bitcoin is living on my Bitcoin node. I can't put it any more than that. If we cannot bring ourselves to look at the intense beauty and majesty of life and be able to articulate that to other people without being embarrassed, oh, you're a nerd. Oh, you're just being hyperbolic. Fuck you. You will be the one that doesn't survive what's coming because you cannot see, or at least you could see, but you are too fucking terrified to articulate because you don't want to be called a nerd, right? No. Evolution happens and it's fractal. Evolution has always been with us. Therefore, everything that extends from us, including building 747s to the software that flies it, also operates under the same rules of evolution. Only those free and open source softwares, or the FOSS, free and open source software, only those projects that attract attention. Basically, I'm hot, come breed with me. That's what that is. It's a breeding technique. You're interesting. You're lovely looking. Other creatures like you want to breed with you. It's the same fucking thing. Oh my God, I can't believe you equated sex with writing software. Yeah, that's how this works. That's how this works, man. That's why Coldcard failed. That's why thousands of Bitcoiners lost life savings, because for whatever reason, the guys at CoinKite decided to be the assholes that they were. And yes, they've come out with firmware updates. You know what? Don't ever use CoinKite products ever again. You want to do yourself a favor? Find somebody who gives a shit about their product long term, not just long enough to get you to buy it and then they basically stop working on it. Stop looking at their code. Stop testing it, because clearly that's what happened at CoinKite. And from an evolutionary standpoint, I hope they end up in a Darwinian endpoint, as in extinction. Moving on, Strategy launches $1.6 billion cash pool after $2 billion common share raise and maintains holds on its Bitcoin buying. Cointelegraph, written by who? But it doesn't say. Oh, Helen Parts. Strategy raised about $2 billion through common stock sales last week while making no Bitcoin purchases. The Treasury company sold 18.26 million MSTR shares last week through its at-the-market offering program. Strategy repurchased $1.43 million, 1.43 million STRC preferred shares for $136.4 million, added $300 million to its U.S. reserve, and directed the remaining proceeds to a newly launched U.S. dollar cash account. The company reported $5.1 billion in its reserve and $1.59 billion in the new cash account as of Sunday, bringing its total cash across the two pools to $6.69 billion. Strategy said the new cash account gives management more flexibility to respond to market conditions and can fund purposes including Bitcoin purchases, preferred stock dividends, debt payments, and securities repurchasing. The company made no Bitcoin purchases or sales during the week, leaving its Bitcoin holdings at 840,447. Okay. Sounds like it almost sounds like they spun off a cash account for special purposes. So we'll have to see where that goes. We are running way longer than I expected this particular episode to go, so I'm going to give you a break, and we are not going to talk about ChatGPT web being full of AI written stuff. With that said, I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.